So very simply, what do we do when we're using financial leverage? Well, the first thing you want to do is borrow at a low rate, which we've done. In this case, we have 2.75%. Then we're going to invest at a higher rate. Very simple, right? Borrow at low rate, we have 2.75. We can invest it in the call options without market risk and earn a higher rate. And then what that allows us to do is to acquire more assets. I can have more money earning interest because I get to use the bank's money. I get to earn interest on the bank's money. So that allows me to have more assets and I earn more interest. Okay, this is all that's happening with this strategy. I know there's moving parts, there's pieces. We're going to give you the tools to go through it and get into it. But this, at the end of the day, is you're able to borrow at a low rate without personal guarantees. You're able to invest at a higher rate with safety and guarantees. This gives you a larger asset to earn interest on. Now you have more interest. You have more income for retirement. And it's just, icing on the cake that you can do this on a tax-free basis. Okay. But when people think about leverage, they often think of risk, and that's what this is different about. Like, this is Ray Dalio, of course, largest hedge fund manager in the world. Many people still confuse leverage with risk, but the reality is leveraging up low risk assets so you can diversify away from risky investments is risk reducing. And leverage, at the end of the day, is what creates fortunes. You will not find any people in that 10 million and above net worth that don't use leverage to magnify wealth. It's just typically a lot of those strategies haven't been available, to people with net worths under $10 million. So I'm going to give you one more chart. This will be the most complicated chart you see on this. But if you can get this concept, this can go a long way to helping you take wealth from 3 million to 5 million, 10 million to 100 million and beyond. Why do people use financial leverage? So I'm going to give you some quick examples. Let's say that we go out there and we borrow at 4% and we invest at 4%. Okay, so let's say you go out and you put in $250K, and over the next 15 years, that money would grow to $450,000 at a 4% rate, right? So you have this 4% rate of return. Then if you use leverage, so you add in your $750K, and after you pay off the bank loan, you would net a profit of $600,000. That would give you a rate of return on capital of 6%. So the first thing I want you to just notice here is, even if you borrow at the same rate, invest at the same rate, because you're using leverage, it magnifies your rate of return. This now is return on capital. You invested at 4, but because you used other people's money, you earned 6. Okay, I'm going to give you another example. Let's say we go out here and we borrow at 4% and we invest at 5%. Now I'm just earning 1% more. I do my same thing. I have $250K. That's going to grow to $520,000 just at 5% over 15 years, right? Very simple. I earn a 5% rate of return. Now when I deploy leverage, $750K, after I pay off the bank, I'm left with a profit of $879,000. which gives me an 8.7% return on capital, right? So I want you to kind of start seeing this pattern. Leverage magnifies the rate of return that you get by using other people's money. This is why real estate builds fortunes. Real estate tends to appreciate at 4 to 5%. Why does it build fortunes? Because you're able to use more capital to do it. Now let's say in the last example, I go out at 4% and I invest and I'm able to earn 6%. Well, my $250K, that's going to grow to $600,000, right? A simple 6% rate of return. Now I add leverage. I pay the bank off. I have 1.2 million, and that gives me an 11% return on capital. So if you can understand this process of how using leverage multiplies your rate of return, same money invested, right? You still invested 250, but instead of earning 6, you earned 11 because you used other people's money. That is the principle that makes banks wealthy. This is the principle that fortunes are built on. And if you get this, it will help you create fortunes as well.